Are we on the brink of a major financial downturn? Tune in as experts discuss market correction signals, AI investment risks, and the potential collapse of the US dollar. Get ahead of these critical insights to safeguard your investments. Today, on Financial News in Review, we will summarize the following videos. From Adam Taggart, Thoughtful Money, we have We're Due for a Correction in Stocks, Lance Roberts and Adam Taggart. From Blockworks Macro, we have Our Markets Beginning to Roll Over, Weekly Roundup. From Kitco News, we have End of Petrodollar, Start of a New Monetary Order, Can This Be Stopped? Andy Schectman, Part 2 TEF. Welcome back to Thoughtful Money, where we dive into the intricacies of financial markets and investment strategies. In this week's episode, Adam Taggart is joined by Lance Roberts, Chief Investment Strategist at Real Investment Advice, for yet another comprehensive market recap. Lance, known for his astute market analyses and disciplined risk management approach, will explore the current trends, uncertainties, and potential corrections looming on the horizon. With a career spanning decades, Lance brings invaluable insights into this dialogue, discussing whether market improvements are sustainable or if caution is warranted. In today's episode, Lance Roberts argues that while markets are experiencing an uplift fueled by trends in artificial intelligence and certain blue-chip stocks, significant corrective risks remain. He delves deep into the valuations of tech giants, potential impacts of market corrections, and offers insights into why investor confidence might be misplaced, particularly amid economic uncertainties. Here are the key points discussed by Lance Roberts' Market Corrections and Deviations. Lance discusses the potential for a market correction, indicating that markets are currently overbought and far above their 20-day and 50-day moving averages. He suggests that corrections to the 20-day moving average, or even down to the 50-day moving average, around 4 to 5%, could be expected to bring markets back to normalcy. Investor sentiment and risk management. Roberts highlights the risk of overconfidence among investors, especially those drawn by the recent AI mania. Investors are highly exuberant, similar to sentiments observed before previous market downturns. He emphasizes the importance of managing risk and not falling prey to market euphoria, as even Nvidia's recent corrections should serve as a wake-up call. Economic indicators and consumer sentiment. There is a noticeable bifurcated trend in consumer sentiment, where lower and middle income brackets are increasingly feeling the economic pinch, significantly impacting their spending power. Roberts addresses the Bloomberg Surprise Index, noting that the current low readings are not so much about economic collapse, but rather indicative of economists' over-optimistic expectations. Valuation shifts over time. Insights into evolving valuation metrics are presented. Roberts explains that what constitutes as high valuations has shifted over the years, suggesting that expectations of severe mean-reverting events might be excessive. He points out that technological interventions, lower interest rates, and extensive fiscal policies have led to a permanent elevation in valuation expectations. Lance Roberts made the following predictions. Potential 20 to 30% market correction. Lance predicts a significant market correction could be in the cards, estimating a potential 20 to 30% downturn if the current geopolitical and economic uncertainties escalate, particularly as we approach the election cycle. Decreased revenue impact from AI. Skepticism surrounding the revenue impact of AI advancements is highlighted. Roberts foresees a continued questioning of AI's incremental revenue benefits, which may lead to cutbacks in AI-related spending, potentially impacting major tech stocks like Nvidia. Lance Roberts wraps up by underscoring the need for caution in current market conditions. While high valuations and recent market exuberance warrant attention, it remains crucial to manage portfolio risks and maintain diversified investments. Investors are encouraged to stay aware of underlying economic indicators and broader market dynamics, and to consider taking profits or hedging their portfolios against realistic downturn scenarios. In this fascinating edition of Blockworks Macro's On the Margin, the team tackles the pressing topic, Are markets beginning to roll over? We hear from frequent contributors discussing economic indicators, credit spreads, and market dynamics while considering whether the current trends imply a recession or further economic slowdown. The core thesis of the video is centered on scrutinizing the early indicators of possible economic slowdown or recession, weighing the Federal Reserve's tightening policies against the backdrop of global economic instability, widening credit spreads, and varying unemployment rates. The discussion aims to discern whether these elements signal a policy mistake by the Fed and the potential repercussions for both national and global markets. Here are the key points discussed by multiple guests. Wider economic indicators. Credit spreads are widening, raising concerns about global sovereign debt and market stability. Economic prints are consistently coming in soft, reminiscent of signals seen before previous recessions in 2019. Federal Reserve policies. The Fed appears to be overly hawkish right at a time when economic indicators signal a slowdown. The Fed's current stance with minimal cuts planned, despite soft economic data, questions their approach. Unemployment and SOM rule. Closer look at the SOM rule, which assesses recession risk when unemployment spikes beyond a specific threshold. Currently, the unemployment data points are approaching critical levels, indicating the potential onset of a recession. Multiple guests made the following predictions. Market dynamics. A significant economic slowdown could lead to an easing of Fed policies sooner rather than later. Predicts that markets might witness a broader rotation out of tech stocks into small caps and other undervalued sectors. Political influence. Political scenarios, like potential new tariffs or changes in tax policies under different administrations, strongly influence economic dynamics. Predicts a Trump presidency might lead to increased tariffs and reduced income taxes, which would be widely inflationary. Overall, the discussion pointed to increasing caution with market conditions, advising viewers to watch key indicators like credit spreads, unemployment rates, and Fed policies closely. There is a speculative sense of nearing recession if the current soft data trends continue. The team urges prioritizing diversification and remaining vigilant, as markets could soon reflect these deeper economic stresses. In this compelling second part of the Kitco News interview, Michelle McCory engages with Andy Schectman, President and CEO of Miles Franklin Precious Metals Investments. This episode dives into the nuances of geopolitical economics, the weakening dominance of the US dollar, and the unpredictable future of global monetary systems. The central thesis of this interview is the notion that the era of the US dollar's dominance, and possibly fiat currency in general, is under immediate threat. Schectman argues that a seismic shift towards a commodity-based monetary system is inevitable, exacerbated by geopolitical actions, economic policies, and a collective global realization that could culminate in a catastrophic devaluation of the dollar. Here are the key points discussed by Andy Schectman. Decline of Petrodollar. Saudi Arabia's decision to let the Petrodollar agreement expire on June 9th, marking a shift to selling oil in multiple currencies. The end of the petrodollar could lead to significant inflation as dollars held abroad return to the U.S. Global debt and inflation. Schectman emphasizes that the U.S. national debt is unsustainable, with limited options for resolution: inflate, default, or find a villain. As the necessity to hold U.S. dollars diminishes, returning dollars will spike domestic inflation, affecting assets inversely correlated to this increase. Central bank digital currencies, CBDC. A potential shift towards a centrally controlled digital currency, driven by policymakers like Lael Brainerd, who are proponents of modern monetary theory, MMT, and CBDC. Political implications. Schectman discusses the implications of Trump's and Biden's approaches to monetary policy, suggesting that Trump's policies could temporarily sustain the dollar's value through deterrence, although the long-term outlook remains bleak. Cloward-Piven strategy. Schectman references the Cloward-Piven theory, suggesting current policies might be intentionally straining the economy to induce systemic failure, paving the way for a socialist system. Andy Schectman made the following predictions. Catastrophic dollar devaluation. Schectman predicts an inevitable and dramatic devaluation of the U.S. dollar, driven by returning international dollars, creating inflation and high interest rates which could destabilize real estate, stocks, and bonds. Shift to commodities-based system. He forecasts a transition towards a commodities-based monetary order where gold and possibly other tangible assets will outperform expectations and to become the cornerstone of the new system. Schectman concludes by emphasizing the importance of preparedness and diversification into tangible assets like gold, which he believes will be central to a new monetary system. He advises viewers to stay ahead of impending economic shifts by hedging against devaluation and inflation. Schectman also highlights the importance of fostering unity within the U.S. to navigate these turbulent times successfully. In this comprehensive review of financial markets, Lance Roberts predicts a significant market correction, emphasizing the overvaluation in AI-driven stocks and the need for vigilant risk management. Meanwhile, guests on Blockworks Macro highlight the widening credit spreads and soft economic data as signs of an impending recession, debating whether the Federal Reserve's current tightening policies are a mistake. Lastly, Andy Schectman warns of the potential collapse of the US dollar and a transition to a commodities-based monetary system, stressing the importance of diversification into tangible assets like gold. Although these views may vary, the consensus emphasizes caution and the need for preparedness in these turbulent times. Thanks for watching Financial News and Review for June 22nd, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see, drop a comment below. See you next time.